8 crores, 40 founders, and zero equity in that startup. That's what Nikhil Kamath and his team at WTF Fund is trying to create as a new playbook on shaping the young Indian founders on how they should get invested and their journey should kick off in venture building. Today, we are kicking off a new series where we take the real investment thesis from the leading investment firms that are shaping the Indian startups. Welcome to Decoding the Investor Thesis with me, Gautam. And in this first episode, we are going to decode the WTF Fund, the grant fund from the house of Nikhil Kamath. Before we get into the fund, let's quickly see about the man who have built this entire ecosystem. Nikhil Kamath, who has co-founded Zerodha in 2010 along with his brother Nitin, he dropped out of school from the age of 15 and worked in a call center. So he got into trading from the age of 18. So that's the story he always comes back to. So that's the origin story. But this is the important phase that made him to shape this WTF Fund. So as you all know, Kamath is not a single funded guy. He runs the whole ecosystem. For example, Zerodha. So that's where the entire empire has started to build. The brokerage platform. Firstly, Zerodha. So the brokerage platform where the entire wealth comes in from. So that sets the foundation. Then TrueBeacon. So TrueBeacon is what their wealth management platform for ultra HNIs from their house. Then comes the WTF ecosystem. So it's a media company which has evolved into a community. WTF Fund is part of this WTF network where it is structuring it as a grant to back up the young founders. Not only this, they do have several VC and PE arms, NK Square, Rainmatter VC, and so on from their house. So, as I said, he's not a single funder. He runs the whole ecosystem. Today, our core focus is going to be on the WTF. Don't take it wrong. It's what the fund. With this, you can clearly see that WTF is not a standalone fund. It's not in isolation also. It's properly structured fund where when you enter into an ecosystem, if you are proving it well, then your legacy carries on and on and on within this ecosystem. And this WTF is the starting point for all the growth. So what actually is WTF Fund? So WTF Fund is a non-dilutive grant worth of rupees 20 lakh, which the team wants to invest on young founders, that is, who are founders with less than age of 25 as the maximum age, and also sector agnostic in nature. So it is not a proper VC fund. It's more of a corporate-led grant associated with some acceleration program. So that's how you should see. So it's a preliminary entry into a full stack VC ecosystem from the family. So that's how you should see. So it's a non-dilutive grant, means the founders are not going to dilute anything in terms of their equity. That's why I said it's a zero equity program for 20 lakh rupees. Whether this 20 lakh is the ultimatum? Definitely not. So the plan was to back 40 founders with the initial corpus target of 8 crores to distribute among the ecosystem. So the plan is very clear. So they don't want to go into sector or run behind proving the experience of the founders. They are not behind the pedigree. All they want to do is they want to reshape the way how young Indian founders are getting funded and want to support the founders in raising their first check, which is always the hardest part. Even Kamath has addressed this in the World Economic Forum recently, that his core focus is to support these young founders in crossing the hardest part of fundraising, that is their first check. So that's what the WTF's core agenda deals around, and the entire thesis also runs behind this. Now, let's get into the actual thesis, what we are going to see today. Hopefully, the context I have set, gives it very clearly on what to expect from them, what not. Now, if you are still not clear, now let me, help you to dive into the thesis. So, this thesis for the WTF Fund has 4 pillars, I would say. So the first thing you want to understand, or the first pillar you want to understand, is age is the primary filter, not your sector. So usually in every VC funds, you would see that they are interested in this particular sector or that particular sector, but here your age only matters. If you are 25 or under, definitely you have passed the first milestone. Why this is because the young founders tend to create the most impact within the entrepreneurship. They have the audacity and risk appetite that comes before the world tells them, to play it safe. So that's what Kamath says is publicly. So rather than playing it safe, he wanted to bet on that, risk-taking attitude of the founders at a very early stage. So he wanted to be the first guy to trust them and support them across. So age as the primary filter is the first thing you want to understand from the thesis. They are not going with the sector focused. The second pillar is access over pedigree. So that's the positioning what WTF wants to bring it around. So this is also the sharpest edge of the thesis because I could read that roughly around 60% of the total applications they receive come from smaller towns. So this model has clearly given them an advantage to go beyond the usual Bangalore's and Mumbai's and Chennai's and Hyderabad and go think beyond the NCR to penetrate to more smaller towns, because this eradicates all the hiccups what young founders will usually have while submitting the applications for their first check. Because less traction or no traction, only with the prototype or near to finished product or an MVP stage. So that's what the usual stage is like. So, they rather than a college degree or sometimes going with a dropout, they don't have a founder pedigree too. So positioning access over pedigree is what the second pillar, which we can understand from this thesis. So again, to be honest, this 60% smaller town applications is the most untapped founder pool what these guys are exploring. Awesome, man. And third pillar, so de-risking the first check. As I keep on saying that the core fundamental agenda is to eradicate the fear or eradicate the trouble, the hardest part of getting the first check. We usually see or we usually hear this a lot of times that the first investment check is on the founders more than product or anything else in the company. So if we are saying that, these guys are living with their thesis. They remove the equity dilution part at the very early phase. So the confidence of founders applying to this, showcasing their ideas, betting on their ideas becomes so easy. So any potential idea which is passing through this, if it is really potential, it has higher chances of hitting the market because they are de-risking the first check fears. So if it's a bad idea, obviously it's going to get eliminated or dropped. But if it's a good idea, according to this thesis, they have higher chances of getting funds. So they need not dilute 15 or 20% or go with any random on-paper valuation to go ahead and dilute. So this de-risking comes as a third pillar for them. Fourth and the final pillar, which I want to cover up today, is ecosystem compounding. So they are prioritizing ecosystem compounding more than just the financial return. How, in the sense, is like usually VCs won't say this loud, but WT Fund does that because they want to see compounded benefits rather than just the financial element. Because WTF is a media engine. So as I said, Kamath is also not a single fund guy. So they already run an ecosystem. This is the piece which will act as a crown for them because to bet on most crucial ideas, most fearless founders. So they already have ecosystem there. They already do have the early customers to get adopted to the product, whichever they pass on through funds, through WTF. So definitely that compounding benefit will be there. If the potential founders go on and build great things, then their proper VC joint investments or a proper institutional investor with the credibility of someone like Kamath backing this venture will be so high. So this compounding effect is what they are believing in this thesis as the fourth pillar, which most usually many VCs will do have, but here they are publicly showcasing it very well. I mean, so nice. Okay. So this is what we can understand from their thesis. Now, the most important part for the founders, what actually WTF looks for. So if you are a founder watching it through, I mean, here's what you want to actually know about the screening process. First, you will be applying through their proper application process. Then they'll do a standard structured interview, deep diving into your business model, your clarity as a founder, your vision you have as a founder to take this venture along. What is the impact you are trying to create out of this product or service you are trying to build on, how you are going to use this ecosystem, and how this is going to benefit you for a long run. What is your next 2 rounds of a fundraising plan? That's the long-term vision you do have, and where you see in the next 5 years. I mean, this covers up, most crucial questions, whatever I'm sharing. Okay. Personally, I wanted to share a few. Cumma is one of the venture that went up to the final round of the WT Fund cohort, 2025 cohort. So we had a co-founder earlier on with 25 years and less than years of age. But unfortunately, until we reached the final round, we parted ways with her. She started a new venture. We supported her. So we relieved from the company, from the board. And the current founders, we are overreached as well. And finally, like we had many AI startups with core deep tech coming in and competing with us. We eventually didn't pass the final round. But this journey, like we applied in May, so up to August, we traveled with the team. With that experience, I would say like for every founders, more than funds, you will learn a lot of things by filling the application, by going through the process. And happily, I could also say that I went into this grind and I also learned a lot of stuff. Since we have passed the stage, we are confidently saying so. Fine. Quickly, if you want to explore their portfolio deep dive, everything is transparent in their website. But the first cohort, they had 15 founders across 9 startups. So that was on September 2024. And the second cohort, they announced on Feb 2025, which had 22 founders across 9 startups. So here in this cohort, in the second cohort, AI took a smaller age than anything else. But, the third thing, which has been announced on December 2025, around 8 startups have been drilled down and selected where core of AI startups went in. Because the only issue what you have with something like this with 20 lakh non-dilutive grant is not much of a deep tech guys will be exploring these kind of 20 lakh check sizes things. But I would say if you are smart enough and if you want to enter into some sort of ecosystem or want to get mentored by such a sort of people, forget about the check you are getting. Just go and express yourself. If you are in, then you are in for a longer run. But many AI startups will feel comfortable with the check size also. So you could see AI startups dominating this. And they're also going to bet on the young founders. So they are catching up with the trend. That's what the portfolio deep dive will give it to you. To answer the major question further is, okay, you said you are going to break an investor thesis, but this is actually a VC fund or not? Definitely not. I'm repeating this. Definitely, this is not a VC fund. But this fund will take you, or this WTF will continue the journey with you until you raise your proper institutional round. More than funding, it's the validation what every founder will get out of going across this thesis, going through this process as well. So definitely, this is not a VC fund. But it's some validation you also want to go there and explore. So finally, to sum it up, so WTF thesis is not betting on the sector, it's betting on the age. It trusts the founders more than anything. It wants to break the barriers of pedigree. It wants to back the most crucial, most risk-appetite founders, particularly who are aged 25 or less than around. So if you are of such age and you are exploring such sort of non-dilutive grants, WTF is something you want to go there and explore. That's it for the first episode. Next episode, we'll see one more interesting investment thesis coming up. And stay tuned, subscribe, and stay connected with the Cumma Circle. Thank you.